I think we're live and we can get started. All right, welcome everyone. Thanks so much for joining our 6th edition of Build Beyond. A little bit of background on this series in case it's your first Build Beyond event. So we created this series here at checkout.com to explore as organizations and thought leaders how to build beyond times of uncertainty like now, and to really thrive by becoming more creative, collaborative, and customer-centric than ever before. So that's exactly what we'll be doing today on the topic of thinking and operating more like a fintech. And I'm really excited because this is our first event of 2021. And as we really turn the page and begin working toward post-pandemic growth or recovery, whatever that means for you, I'm really thrilled to be joined by our speakers today, Eric Sager, the COO of Plaid, as well as Mike Benchimol, the COO of checkout.com. So I'll actually just let the panelists introduce themselves. So Eric, do you want to tell us a little bit more about yourself, as well as Plaid, for those who don't know what Plaid does?
Sure. Thank you, Tracy, and thank you for having me. My name is Eric Sager. I'm the COO of Plaid. I've been with Plaid for the last 2 years. I actually started my career in financial services at Capital One, so I go way back, like in the early 2000s. I was part of a group of folks there that kind of helped build originally kind of the credit card business, and then ultimately kind of diversifying into banks. I spent a number of years at Square through the IPO, and then before joining Plaid, spent a number of years building a company in the US called Bluevine, which operates in the small business kind of lending space. For Plaid specifically, I think we've been in the news quite a bit in the recent days, but we focus on helping our customers kind of gain access to consumer permission financial information. So at this point, we have 7 different endpoints, everything from transactions information to authenticating the account and routing number to doing a balance check. And we do that in a secure kind of consumer permissioned way. At this point, we have thousands of customers, mainly in the US, but we're starting to expand aggressively kind of in Europe and around the globe. And then we have about 18,000 institutions, and then obviously hundreds of millions of consumers that use the platform every single day to access folks like Venmo, Square, and many, many more of the fintechs that we all know and love.
Great, thanks for joining us, Eric. Mike, same question for you, a little bit of an intro on yourself and on checkout.com.
Yeah, thanks, Tracy, and thanks indeed for hosting us. So I'm Mike Benchimol, I'm the Chief Operating Officer at checkout.com. I joined the company close to 6 years ago now. Done a number of roles in the period, but since last year, Chief Operating Officer. I started my career around 11 years ago in financial services as well, JP Morgan to be precise. So I was an investment banker for a little while. I worked in strategy for JP Morgan as well before moving to Checkout. At Checkout, it's obviously been a very interesting and varied journey in the past 6 years to where we are today. Today, Checkout is a global payments provider offering payment services to online merchants globally. We have a number of licenses across the globe, in the UK, in France, in Singapore, Hong Kong, Australia, and adding more countries as we go. We're present in the Middle East, we're present in the US, in Latin America as well. We offer one single platform with one integration to effectively access global payments capabilities. That means the likes of Visa, MasterCard, American Express, but also local payment methods, alternative payment methods globally. We serve, as mentioned, online merchants. So we have a few thousand merchants today that are spread across the globe. And core to our value proposition is really to go and remove some of the complexity and the idiosyncrasies of payments globally, again, through one platform, one integration, so that our merchants can collect funds and then deal with those funds globally with a lot of flexibility. We're around 1,000 people today, and hopefully keep growing for many years.
Great, thanks, Mike. And for the audience, I'm Tracy Meng. I'm the VP of Partnerships for checkout.com. So shout out to all our partners who are tuning in today. I have the privilege of moderating today's panel on a topic that's near and dear to my heart as well, since I come from a fintech and payments background, was at Google in their payments division for about 5 years, and have been in various startups throughout. So before we get started, I wanted to do some quick housekeeping for the audience. So this session will be 50 minutes long. long. We'll actually leave some time at the end for questions. So if you do have a question at any point in the session, you can drop it in the Q&A box at the bottom of your Zoom window, and we'll try to get to it at the very end. So with that, I think we'll jump in. So the first question is actually pretty timely. This has been a really exciting few weeks for both companies. So I wanted to start there. Eric, we saw last week that the Plaid Visa deal was called off and that Plaid will now be pursuing an independent path forward. Wanted to see if you could give the audience a little bit more context here, what this means about Plaid's future and fintech innovation, and any other thoughts you have about this new development.
Sure. I mean, we obviously remain incredibly excited about what the future holds for both Plaid and the ecosystem. As far as the decision with Visa, it was ultimately a joint decision. We jointly made the decision kind of not to kind of continue down that path. From a Plaid perspective, obviously, a lot has changed since we kind of initially had agreed to the deal at the beginning of last year. Just seeing the amazing success that you all had at Checkout and so many other companies across fintech, I think it just kind of changed our calculus in terms of the opportunity ahead. And so at this point, we're just excited about what we can continue to build with so many of our customers, so many of our partners, and what we can continue to help kind of the ecosystem overall achieve. And Visa will still be a part of that. They will remain investors. They will be partners of ours on a number of different fronts. And so we are looking forward to kind of that relationship getting closer and closer as well. But as far as like the actual deal itself is concerned, I think at this point, like all parties are looking forward to moving forward independently.
It's great to hear. And Mike, similar question for you. It was actually a really big week for checkout.com as well. Can you give us a little bit more insight on this latest fundraising round and what that means for the company?
Sure. Yeah, as most of you have seen, we did raise 450 million at a 15 billion valuation last week. So obviously a huge milestone for the company and one we're very happy with. This is really a continuation of the work we've been doing for many years, which is really around strengthening the platform, strengthening the company. We've been profitable for many years, since 2012, as a matter of fact. So since our Series A, it's always been about giving additional strategic flexibility to the company. That means the ability to look at strategic investments, the ability to be completely flexible in our product development, and really strive to effectively do the right thing for our partners and for our merchants. Our independence is very important to us, and the ability to add effectively partners and investors such as Tiger Global in this round, and all the investors that followed us as well for many years, is extremely important to give us that leverage. Also, as a regulated entity in many places, the strength of our balance sheet is very important to us and to regulators as well. So it further gives us credibility and the flexibility we need to continue on the journey of integrated and connected finance that we want to continue.
Exciting. Thanks. Great. Well, let's now dive into some topics around fintech more broadly. Eric, you mentioned with your background, I think you've probably been in fintech before the word fintech was even coined. But how have you seen the fintech community and the industry really change the economic landscape in the past 5 to 10 years?
I mean, the way I think about it is, and we've seen this at kind of Plaid firsthand as well, right? It's kind of happening in waves, right? Like the first wave was the folks that were kind of unbundling solutions, kind of taking it to the next level in terms of like the Chimes and the Robinhoods, right? Like they're coming in, they're kind of offering kind of one solution, and that's what we think of like a fintech 1.0, right? And some of those companies now have become obviously incredibly successful, incredibly big in their own right, but kind of that wave is still kind of gathering momentum. Then there's a second wave of folks, which is a lot of the kind of the legacy institutions, right, are now kind of jumping onto kind of the digital bandwagon as well, and increasingly kind of driving towards building digital solutions of their own. I think COVID has actually even further accelerated that trend, right? So whether those are regional banks or kind of large kind of national banks, or even some like insurance companies and kind of other players, but it's kind of like existing players, right, that are really focusing on kind of this digital transformation and getting into like quote unquote fintech. And then the third wave is like a lot of the tech players, right? So you're seeing Apple get into fintech, you're seeing Google more recently kind of get into fintech, and the list goes on and on. And so I think it's this amazing opportunity where basically everybody, right, like is one small step at a time kind of moving into that direction. And for those of us that are able to kind of partner and kind of work with kind of an entire cross section across all three parts of that overall wave, I think it's a really, really exciting time. I think we're going to look back one day and like, there will never quite be a time like this, right? Where like literally doesn't matter what company you are, you're pretty much working on something that's kind of fintech related or fintech enabled. And then from there, I think it will go into more of like kind of true like embedded finance. Now, some of that is already happening with some of the solutions that I just kind of highlighted, but I think that's the next trend. Is like it's just going to get seamlessly embedded into kind of day-to-day experiences that consumers and customers have all around the world. And then the third phase will be more automated finance, right? Where suddenly we'll be at a place where we can actually make decisions on behalf of customers, right? Like one of the things that like I've always lived through is like today we've removed a lot of the friction, right? So it's easier than it's ever been for consumers to go get a new bank account or to get a new credit card or to manage their own personal financial lives. But crucially, they still have to do something, right? We're not that far away from where the data layer will exist for us to actually do truly automated solutions, right? Where like I just trust you to optimize, and you basically, your job is to like minimize my own personal kind of cost of capital across whatever different facilities you may want to open or close or transfer money across on my behalf, right? And so those types of things I think will just like really change the game, because today, most of the people that are able to take advantage of it, while there's many, there's still so much friction, right, left in the process that not everybody does, right? And so there's a lot of these stories where like, sure, you could transfer your balances to a lower cost interest rate, but you would still have to go do some work to do it. So the sad reality is like too many people don't, but in a world where it's fully automated, that's no longer an issue, right? Like you really just kind of immediately flows and the benefits accrue to kind of consumers. And I think from my perspective personally, it in many cases accrues to consumers that are like the least supported today, right? Like they're the folks that are like the least financially literate, et cetera, that are actually kind of suffering the most from the system as it exists today. But some of the things that we're able to build, where we're building this new infrastructure layer and all the amazing solutions on top, you end up in a world that's far more democratized, far fairer across everybody, because everybody's getting the same kind of optimized experience that you or I can only get because we have a private wealth advisor.
Yeah, we hear that word a lot, just democratizing access to what previously was behind an ivory tower. And you mentioned around the impact of COVID. Which trends do you see kind of persisting beyond COVID, and which do you think are more temporary and will kind of revert back as we look toward the post-pandemic world?
I think most of them will stick to one degree or another, right? I certainly think the ones where like you're removing the greatest amount of friction, like think of like what's happening in mortgages, for example, right? If you've ever gone through like a physical mortgage process where you go to a bank and you submit your paperwork and everything else, and then you do it digitally through someone like Blend or somebody else, the experience is simply so much better, right? That like all that was missing was people just didn't inherently kind of trust, right, some of those players to do it. COVID has helped accelerate that. But once you have that experience, you're not going back, right? Like there's just like or at least the expectations of what an offline process would have to look like and product would have to look like in order for you to be satisfied with it have fundamentally changed. And that's not going to revert. And so, I think there's many examples like that where it's clear that the shift is here and the expectation is very, very, very different. And we see that, right? Like we've done a lot of surveys with consumers. We obviously talk a lot to our customers in terms of what they're seeing. And that is very, very consistent, right? Like that's just like the expectation of what you can do and what you can control and what you have access and visibility into, I think has kind of fundamentally shifted. So at this point, it's a race to make sure that you have those capabilities. If you don't, I think it's very hard to see how you're going to be successful, even in a post-COVID world.
Super interesting, and we'll dive in a little bit more on that and how to actually take advantage of fintech offerings in a little bit. But Mike, same question for you. How have you seen fintech really evolve in your time at Checkout and previously at JP Morgan?
Yeah, so I think adding to what Eric was saying, clearly there's been a number of business models that have been enabled by players like fintechs that have brought flexibility to the system. You can think of financial apps, marketplaces, peer-to-peer lending, et cetera, et cetera. The list is long. We talked about democratizing. Same here, democratizing access to stock trading, democratizing access to banks where, you have no fees on lots of neobanks. You have, it also effectively pushed like kind of threw a spanner in the works of some like very, very well ingrained ideas such as, well, you need branches to do banking. Well, first, like lots of the neobanks started with no branches, and then COVID hits, and then everyone has to do with no branch, and it actually kind of works. And so basically, this has effectively modernizing, democratizing is really two of the key things. We talked about friction, operational efficiencies is something that players such as Plaid have been bringing for access to banking data. On our side at checkout, we try to do this with removing some of the layers and the complexity of payments, and that effectively removes intermediaries. If you think of payments, historically, a few years ago, when you were a merchant wanting to sell stuff, you may be going to 4 or 5 different effectively partners to actually accept payments. You're talking to a gateway, you're talking to a fraud provider, you're talking to an acquiring bank, maybe you're talking to another company that's doing effectively the interface on ISO, you're talking to someone for reporting or reconciliation. And effectively now a lot of those functions have been integrated, and that removes a lot of headaches and a lot of friction. Similarly, when you multiply this by the ability to roll out a similar model globally, which has always been have friction points, you get there. Cross-border payments is another great example. That's something that has been pushed, like TransferWise became very famous for this, and for good reason, by really removing a lot of the cost and the complexity of cross-border payments. And today you have many other actors that are going that direction with different approaches. Novi, digital currencies in general. So really it's about challenging some of the ideas that were deeply ingrained on how certain things should be done. And if anything, you were asking Eric about COVID. I think COVID kind of validated a lot of those ideas. So I think the first waves of fintech that we've seen in the past, effectively the past decade, have really shown a different model in lots of areas, and a lot of those assumptions that were still kind of challenged by some ways that stuff were done for a long time before, that kind of got validated by COVID. So that's really what we've seen, and that's what we expect to continue seeing now.
Great. And Mike, you're based in the UK, you're French. We were just talking in kind of the session right before this as we were prepping about how international this group is. Eric is German himself, but Plaid also has international growth aspirations. Mike, I wanted to just get your thoughts on as you think about these trends, are there any that are kind of specific to certain geographies that you would call out that you've seen as part of a global company?
Yes, so definitely, I think you have the starting point was quite different from country to country. Typically, talking about the UK and France and Germany, to talk about that, there was a very different starting point in terms of digital payments. Germany was still very much cash heavy or bank payments versus France, which was already no real bank payments but some credit cards, and then UK, which is heavily cards. And I think that creates already from the get-go a pretty big difference in starting point, and then of dynamics of the markets. What we've seen is that COVID has leveled off a lot of things, because you've had lots of either markets or parts of the population that were maybe a bit less prone to adopt digital payments of any shape or form, etc. And all of a sudden, this became kind of mandatory. You at the peak of COVID here in the UK, when you were going to the supermarket, if you were like taking out cash, you were really frowned upon. And so basically all of a sudden, like paying by card ends up like kind of the new normal versus one of two reasonable options. And I think that the dynamics are different. If you talk about Asia, in China, it's not that much card. You have wallets with, Alipay and WeChat. That kind of skipped a lot of the infrastructure we have in Europe. But the underlying trend is the same. It's more digitalization, it's more flexibility, more instantaneous, and those are consistent across the globe. Those are really trends and outcomes that they may end up happening with different means, but the direction is the same.
Got it. And Eric, as Plaid is growing in the UK and Europe, what are some differences or similarities that you're seeing from the Plaid perspective on fintech adoption across different geos?
I mean, Mike did a great job kind of summarizing it, right? I think across different geographies, there's certainly cultural kind of infrastructure differences, et cetera, that make none of those markets exactly alike. At the same time, though, I think the idea about reducing friction, like really building like the optimal kind of consumer experience or user experience, like those are things that are with us regardless of the market. And so from a Plaid perspective, right, like we really focus on kind of serving kind of our customers and our developers to make sure that we reduce that friction as much as possible, regardless of where they may operate in the world, right? So those core principles actually are the same. In terms of how we execute them, those are slightly different across geographies. But the core goal of kind of helping developers kind of remove friction and make it really, really easy for them to kind of scale these amazing solutions remains the same no matter where we go. And so we've certainly seen, I think, a lot of uptake. You know, in Canada, we're starting to see really, really kind of strong adoption across Europe. And so we're excited about what that means for those geographies in particular. The final thing we're seeing is more and more players who are looking for global solutions, right? Like there's actually more and more players that are operating across those geographies now. And as they operate across those geographies, they want to have infrastructure that they can share across all of their markets simultaneously, because again, that allows them to kind of scale and much more effectively kind of build out solutions in the markets that they're already in, but also crucially then will make it much easier for them to kind of add additional kind of markets later on.
Yeah, we definitely resonate with that here at Checkout. I wanted to, since both of you are the chief operating officers, and I suspect that you both deal with a lot of regulatory considerations in your jobs, given that we are in a very regulated space. What are some challenges and opportunities that you think face fintech innovation as it relates to regulation, security, risk? I mean, we're handling very important data, and it's things that you don't want to get wrong. So, what are some of your thoughts there? Maybe we'll start with Eric there.
I think obviously kind of security and so forth is kind of paramount when you're working with the type of information that we work with, right? Like outside of health information, financial information is kind of by far the most sensitive, and so we invest a lot there. I think from a broader kind of regulatory perspective, I think this applies to many firms actually that came out of the Valley. I don't know that they've always been as kind of proactive and savvy on the regulatory front, right, as they could have or should have been. And that flies in the face of like the actual impact, right? I don't think there's any question that like fintech in the US has truly democratized kind of financial services, right? Like I remember when I first came to the US, my initial credit card was $200 credit limit and a 30-something% APR, right? Like that was the offer. And it's because I didn't exist in the credit bureaus, right? There's a whole market segment that people call underserved, right? Which is like, depending on how you want to do the math, like a third to more than half of the people in the country are underserved, right? And so it's fintechs that found new ways to kind of innovate and kind of provide kind of solutions to those customers, which truly make their financial lives better, right? That's the thing that I think is really important to keep in mind. Like at Square, it is much, much easier now to start a small business and take credit card payments than it was before, right? Many of the lenders you're suddenly gaining access to credit at a rate that you would never have been able to gain access to credit to kind of before. And so those big picture things, I think, are actually very much aligned with what regulators, both in the US and Europe, but also other geographies around the world are looking for, right? Like they want to make sure that everybody has a fair chance to participate in the financial system, right? That everybody's getting competitive products. And so at times, I think our struggle as an industry has a little bit been like, the truth is that is exactly what we're doing, right? I don't think we've always done the best job of kind of making sure that regulators and policymakers and others kind of really understand that kind of firsthand. And so at times, I think regulation has kind of evolved a little bit more slowly than I think would be ideal for consumers, because that's ultimately what matters here, right? Like if you can reduce, again, the friction and you can give better products to more people, at the end of the day, that is a good outcome. And that's an outcome that everybody's aligned on, both the fintechs, as well as kind of the regulators and policymakers as well.
Mike, what are your thoughts?
So clearly aligned. I think security and fraud management, risk, etc., is a key concern. It's something that we can't get wrong. To say it simply, we hold people's card data, and it's something that protecting that trust is paramount. In the world of payments as well, today there is a big a big work stream globally around secure transactions, so 3D Secure 2.0. This is basically, you know, the friction point between safety, security on one side and convenience on the other. And effectively our job, and you know, as fintechs, but actors in the sector, is to find the right level of equilibrium here, so that at the same time we protect the ultimate consumer, cardholders, our clients, whilst ensuring that the experience remains good, which is a challenge as, you know, regulation evolves and is sometimes inconsistent between countries. And I think our challenge as fintechs is to take all that regulatory framework and effectively package it for our clients and their clients behind that in a way that gives them the safety of operating within the framework, the benefits of the benefits in terms of security, in terms of trust, in terms of confidence, whatever you want to call it, that framework brings, but removing as much of the complexity that it entails. And today, that's, you know, when you look at fintechs as a whole, you have two categories. You have fintechs that try to be really a tech layer on top of, you know, financial services. And in this one, you stay a bit one step away from the regulator itself, and you basically effectively outsource this to a financial institution. Or you have fintechs that go full stack. Checkout, we really believe in the second model, where, you know, going and doing the work on the regulatory side and being licensed and getting, you know, the direct access wherever it's legally possible, so that we can actually go and try to package that that regulatory framework and deliver it to our clients in a way that is easy to consume. And that means, you know, the moment you start talking cross-border, for example, that becomes even more important in terms of, you know, you remit funds, you get access to third-party countries from where you are. This is a regulatory framework that is harder to navigate than domestic framework. How we package this and how we bring this to the market is pretty key, and that's how we create value as well.
And I think that's a really good segue into our next section, because you both talked about kind of underserved, bridging the gap, as well as you know, leveraging companies that have actually built in-house, you know, done the hard work to figure out all of the regulatory issues and created a very secure stack. That transitions us into kind of the topic at hand, which is for businesses, both fintech and non-fintechs, how would you say are ways in which you know, organizations can think and operate like a fintech or leverage fintech resources to really grow and prosper? So Mike, I'll direct that question to you first.
Yeah, so really, you know, we touched upon those topics, you know, international growth, new types of businesses such as marketplaces. Those are effectively challenges that we believe companies such as ours are well suited to tackle. The reality is that businesses, and that's something that I think Eric mentioned earlier, businesses today want to operate globally. That is they have more and more, you know, local operations in multiple countries, and finding partners that can enable them, ideally through one platform to simplify the work, to actually operate in those countries efficiently in compliance with local regulations, with the right level of performance, the right level of comfort around the safety and the appropriateness of the solution is very, very key. And today, you know, as we grow, the ability to take a model and take a platform that, you know, has been growing in a number of places and then roll it out across multiple jurisdictions is very key. The second thing is basically how you go effectively deeper in the stack, either like deeper or effectively on the side. What are other services that you can go and attach to that core service that you're providing, so that effectively, you know, clients can effectively rely on you for like a broader set of services. This brings sometimes and often, you know, additional regulatory questions that basically, if we solve them properly, and this is what we try to do every day at checkout, ends up making the package bigger in terms of what our clients can benefit from the platform we're offering to them.
Got it. Eric?
I say for me, there's two things I would add to that. Right? Kind of one is the concept of, I think the fintech revolution, right, has made it easier and easier, and I think this applies to other businesses as well, to really kind of micro segment your customer base, right? Like it used to be, if you wanted to build something for a segment of your customers, that segment would have to be pretty big. That's no longer true, right? Like with all the infrastructure and everything else that's been built on the back end, it's now more easy than ever to build things that are really kind of custom focused on like a very specific and potentially very niche segment. And then you just string together many, many different niches to build a huge business. So that's a really kind of important, I think, kind of advancement, right? That wasn't possible before. And it led to things like us grouping massive amounts of people into kind of underserved, as opposed to understanding that their needs are actually kind of fundamentally different. And then the second concept is like really zero basing and really building products like that you think are ideal for that specific segment, as opposed to products, right, that are just like a little bit 10% better, or we're trying to squeeze 10% more profitability out of it. And so I think I've lived that a number of times, right? It's how we went about it at Square, it's how we went about it at Bluevine. From a B2B perspective, it's how we go about it at Plaid, right? It's all about what does the ideal experience for our customers and for consumers actually look like? And then let's work backwards from there. And that means segment by segment, microsegment by microsegment, we end up building these amazing solutions. And I think that concept like needs to take hold elsewhere. Anybody that's still building, right, for building the same thing for 100 segments that really should be 100 small segments individually, I think they're in for a world of hurt. Like, I don't think that's going to turn around. They're going to keep getting outperformed segment by segment as we go along. And that's why so many of the fintechs that we've seen be so successful have been so successful. It's basically the incumbents, right, didn't react fast enough to both micro-segmenting and then really truly building like the ideal solution and then figuring out kind of the rest from there.
Are there examples of businesses that wouldn't label themselves as fintech, but have been really fintech savvy in the last couple of years that you've seen in your role at Plaid or elsewhere? I'm just thinking of, ways in which businesses that are, in other kind of verticals can also take advantage of fintech innovation.
Yeah, I think a lot of the tech players, right? So folks that like actually embody those same two principles that I just shared in a non-financial, in a non-fintech context are leveraging fintech in ways to kind of further enhance their value proposition, right? Again, I think we talked about Google. You see what some of the things that kind of Netflix, Amazon, Apple, and others are doing, right? Like they've actually moved down this path as well, right? Where they're very focused about segment by segment, what's really the best-in-class product I can possibly build, and then I kind of build from there. And now they're layering, like embedding, right, fintech kind of into those experiences. I think we'll see a lot more of that. And I think they've been very successful at doing so because, again, they come at it from the same strategic kind of foundation, right, with the same kind of core building blocks as what the successful fintechs have already done.
Got it. Mike, any examples that you've come across that you think the audience might find valuable?
Yeah, I think a bit in line with what Eric was saying, marketplaces or, gig economy players such as, Uber, for example, have always been very, very close to some of the things that we're trying to solve. So, how you manage lots of different flows coming in and then coming out to a lot of multiple parties in various ways. You have drivers here, and you have, in the case of food delivery services, you have also restaurants. And effectively that brings the model very, very closely aligned with a lot of the challenges that we're trying to solve. Also because there's obviously flows of money involved here. You have other providers such as, anyone who has high volumes of transactions, and also on a cross-border basis. Those companies, whatever the line of business, end up having to solve very similar challenges than the ones that we're solving. So they can leverage players such as us or Plaid for this, but more often than not, they face the exact same questions that we faced as we build the solution. Than that. The last one is really around optimization. As companies get big, when you think of payments for the part that we know well at checkout, the ability to optimize even by a few bips means sometimes a lot of money. And that means that a lot of the challenges that we try to solve from a conversion standpoint, making sure that legit transactions go through, making sure that you fend off fraud, become extremely important to them. And you have, players such as, we talked about Uber, but same for them, they don't want a ride to be declined for the wrong reasons. The likes of Netflix, etc. Those are companies that are effectively, very much focusing on this and that are touching topics close to the ones we're touching.
That's great. And, I think in terms of the businesses that are thinking about whether to use, an outsourced party to help with some of these use cases versus building themselves, what are some of the parameters that you would give as guidance as businesses thinking about kind of this constant build by partner decision that they have to make, whether it's, fintech or payments or any of the areas that we've touched on so far?
Do you want me to go first, Tracy?
Sure, yeah, go for it, Mike.
So I think the answer is, the very helpful, it depends. The reality is, and from our experience, we see that if you're going to partner, either you buy from someone or you partner, you have to make sure you keep like a level of flexibility. In a world where this is becoming increasingly important for those clients, keeping the flexibility so that whoever they're partnering with or whatever they're buying can be tailored to their needs, can actually be flexible, and in full transparency can be exited if it's not adequate anymore, is very, very key. And at Checkout, we've always had an approach of being extremely flexible in how we deliver and offer our solutions, and the flexibility we give our merchants to implement what makes sense for them and how it makes sense for them to implement it, and to not basically lock them into something that is suboptimal for them. And I think, beyond the buy, build, partner question, I think the general thing is if you find a partner that effectively gives you the flexibility to tailor the solution to your needs, and you can leverage the heavy lifting on the regulatory side, notably, because that's the one that creates the biggest hurdle, fairness. You have also direct access in countries, etc. But if you can leverage that heavy lifting that fintechs or other partners have done, but you keep the flexibility to use what you need and not be forced to use more, or not be short-handed because you can't roll it out in places where you need it as well, then partnering is the right thing to do. But it really depends. You will have cases where clearly there are benefits to go and go full stack. But the flexibility and the ability to tailor is really, really the key here. And as long as you keep that, you're probably in good hands.
Great, thank you. And Eric, what are some considerations you think businesses should consider when evaluating whether to build, buy, or partner?
I mean, Mike just shared some very good advice. I do think kind of making sure that like you have the flexibility for anything that is a strategic imperative for your business to make sure that you have that is very important, right? Like the last thing you want is like you're 100% all in on Wirecard. And then you can't switch, right? Because you're kind of locked into something that's no longer kind of obviously giving you what you need to kind of run your business. So you never want to put yourself in that position. I think in terms of thinking about where to kind of partner or build, et cetera, I think the key is like having a really good understanding yourself of like, what are the strategic differentiators? Like, what are the capabilities that you're actually ultimately at scale looking to kind of help differentiate the solutions that you're bringing to market for the segments that you're targeting? And so I'm sometimes surprised by how many folks oftentimes they fall into areas, right, where it's unclear that they are doing it any better than anybody else. It's unclear that it's like helpful to their long-term strategy, right? There actually are flexible solutions to kind of partner, right? And so all that does is take their eye off the ball from like a much bigger kind of opportunity elsewhere. And so I think luckily for so many startups and developers and entrepreneurs, we now live in a world where it's literally never been easier, right, to put together a variety of different solutions and package them in a way that in turn creates kind of a derivative solution that like really changes the game. And so that in of itself ends up in many cases, I think, being the differentiator, right? Like you take different ingredients, they're ingredients that frankly everybody has access to and could buy if they wanted to, but you combine them in such unique in new and unique ways that what you end up making out of those ingredients is something that actually is very, very difficult to kind of replicate, and certainly very, very difficult to kind of to scale once somebody's kind of gone down that curve. And so that's a little bit like where the magic is, right? Is if I was going to start a business now, I would focus it on something actually where like you're just taking all these things and you're continuously kind of combining them in new and unique ways, and you're building amazing solutions based on that. And that's harder to copy than people think. It's easy to say, oh, they have nothing proprietary, I could easily do it. And then you go try, and it turns out it's much, much, much more difficult than you think it is. And there's plenty of businesses out there right now that I think are just doing incredibly well by simply kind of executing on that, right? They maintain that flexibility that Mike spoke about, and then they're just continuously kind of combining and recombining kind of ingredients that are kind of pre-existing solutions kind of across the ecosystem in ways that nobody else really thought about. And that's leading to fantastic outcomes for them.
Got it. And speaking of, the hypothetical, if you were to start your own fintech startup right now, this is actually a question from the audience. What are some sort of questions or inputs that you see that are coming from high growth fintech VCs or just investors in general? I think that could be potentially a leading indicator for trends sometimes. So any kind of trends that you guys are identifying as kind of leaders in the field and also in working with other fintech innovators? So maybe back to you, Mike.
Yeah. So I think, we talked about COVID and what it did to the market in general. In the case of checkout.com specifically, we serve online merchants. And so what that means is that in our case, COVID has been, if anything, a huge acceleration of a trend that had been there for many years already of, shifting from offline commerce to online. And so that has been incredibly supportive as well. And I think, there are not necessarily, very new questions that investors have been asking. It's more around, in the context of COVID, that is an incredibly supportive trend. How can we leverage this to go even faster than what we could do? We talked about a lot of the trends that it brings, in terms of digitization, et cetera, but it's basically, this accelerates a lot of the trends. Are we still, are we still ambitious enough from the pre-COVID times, or can we go even faster? And can we leverage this? Can we serve that wave even more by accelerating plans that were maybe coming 2-3 years down the road because the market is more ready? You have, when you think of it, and in Europe, definitely it was the case, you have thousands and thousands of businesses, hundreds of thousands of businesses that actually went online for the first time. A little, street shop, all of a sudden, created a website and started selling online, and you could do click and collect. And that creates a huge opportunity in the case of payments for people like us, but it also is a trend that we don't see going away. And I think the question, post-COVID is, how do we accompany, how can we actually enable that trend as well? How can we make sure that new era of effectively new entrepreneurs are going to go online first and online directly, or online the first day? Not only, maybe one day we'll go online, it becomes a given. How can we make sure that we can accompany this, we can actually foster the environment so that this trend really takes off? And I think that's one of the key questions we hear. And something we think about pretty deeply every day here.
Great, thanks. Eric, what about you? Any trends that you're seeing from kind of the investor community?
I'll bring it back to something we talked about earlier, but I do think investors increasingly are looking for, okay, where does a company still have a very meaningful edge, right? And this comes back to micro segments. And then number two, how do you go from one micro segments to 2 to 3, right? So basically, how do you identify the right segment early on where two things are true? One, you can actually build a product that's significantly differentiated and much better than what currently exists for that segment in particular. And two, where the capabilities that you're building in doing so then extend themselves to the second micro segment and then to the third and the fourth and the fifth. I think that's how you're going to see more and more of these businesses built. I think the days of and maybe look, there's always going to be some exception to the rule. I think there'll still be some players maybe that do it broadly, but most of them I think will follow that recipe, right? And I think what investors are looking for is, if you're a founder, do you have a strategy and a vision that actually ties all of that together, right? It's not random, it's pre-planned. It's hey, I'm actually going into maybe a less than ideal segment to begin with. It's not the best segment, it's the fourth or fifth best segment, but crucially, it helps me develop the capabilities I need to then more easily expand to the second segment and the third segment and the fourth segment. And being able to line those up in the right order, I think will become crucial. And that's exactly what investors, I think, are looking for in terms of trying to figure out who's going to be able to successfully navigate that kind of journey.
Excellent. As we wrap up, I wanted to ask one final question. If you look at just the customer lists of Plaid and Checkout, there's actually a lot of overlap. There's, you have the TransferWise, Mike, you mentioned, and, the Coinbases of the world who are kind of using both companies' products. What do you actually see in the other company that has overlapping or complementary values as yours? So, Mike, I'll ask for you to kind of think about what that looks like for Plaid, and then Eric, for you to think about, checkout, sort of how checkout complements or overlaps Plaid's value to the fintech community. So Mike, maybe we'll start with you to kind of give your perspective on Plaid.
Yeah, so I think, as you said, we share a number of customers, and we come for basically two angles of the payments flow. On the checkout side, as a payment provider, we acquire funds initially. There is a strong bias globally for everything that relates to cards and other payment methods. I think on the bank account side, at the exception of some countries where bank payments are pretty prevalent, it's less globally a payments question than it is a ongoing financial management question. And I think that's why the offering of the two services are pretty complementary, because you have cards on one side, you have banks on the other side, you have flow ins and you have flow outs, you have what's happening in the flow, and then you have effectively what's happening in the account itself and the balance, and what basically Plaid can offer. So we see a lot of complementarity in the two offerings. I'm sure Eric will have also a few more thoughts on this, but effectively, it's not like two sides of the same coin, but it's a very complementary part of the flow when you look at the end-to-end experience that a merchant may have. And then basically from a consumer standpoint, we're less visible, but we're part of the flow and they don't know. But that flow is something that's visible and very visible to them through Plaid's offering. So effectively, it's a, again, very complementary. There is a little bit of overlap, but it's mostly, two sides of a very similar coin.
Eric, same question for you.
Yeah, I mean, it's definitely complementary when it comes to kind of our two companies kind of working together. I think the approach that I see is one of kind of really helping our customers kind of reduce friction, right? While at the same time, making sure that collectively we're really good stewards in the context of consumers broadly, banks, regulators, kind of everyone else. Like that's the key value proposition, right? It's so much easier now for you to be able to, for Plaid, for you to be able to access user consumer permission financial data than it ever was before. So you can build all these amazing things. But crucially, you don't have to worry about maintaining 18,000 different relationships with financial institutions, right? You don't have to worry about all these other things that would normally go along with doing something like that. And that's what enables such amazing innovation. And I think the same is true for what you're doing at checkout, right? It's like you've removed so much of the friction that suddenly people are able to focus on other aspects of their business in a way that they were never able to before, while still getting a lot of the benefits, if not all the benefits, in some cases actually even more than they could have ever gotten if they did it alone, in terms of like their own very specific customized solutions. And that's the best of all worlds, right? You're able to get the benefits that come from scale from kind of a centralized kind of platform and network, but you're actually able to execute on that platform in a way that is like wholly customized to your specific set of products and solutions that you're trying to bring to market. Like, and that's amazing. And I think both of our companies are kind of on the leading edge of helping make that happen. And that's why we have the customers that we have, right? Because we're able to kind of really help them with what otherwise would be an incredibly difficult problem for them to solve at scale themselves.
I think maybe just to add something here, I think the point of friction is very fair. I focused on the value chain rather than the approach, but we both remove a lot of friction. We do it for merchants, you do it for many different actors, including consumers. In terms of the value chain and the business model, when you think of it, there is some overlap. And as we continue the journey on the checkout side, there is probably going to be a bit more. Pay in, pay outs is the end-to-end flow, where you're going to see a lot more checkout data in the Plaid data as well. So we do see that complementarity and that similarity also increase in the coming years, and we see that also with lots of other fintechs, as a matter of fact, where a lot of the problem starts to intersect, and they solve with different approaches and different angles, but a lot of the problems intersect pretty closely.
Great. Well, that wraps things up, and we're actually at time. So Eric, Mike, thank you both so much for your time. As COOs, I'm sure you have very busy schedules, so really appreciate you taking the time to chat with us. And thanks to all the participants and the audience for joining us for the session. Stay tuned for the next one, and we'll see you then. Thanks, everyone.
Thank you. Have a great week.
Thank you very much.
Bye.
Bye-bye.